Good evening, Aman and Alima.
Good
Am I
evening.
audible to both of you?
Yes,
Okay. How are you doing, both of you? Aman and Alima. How are
we are
you?
great.
Okay, that's nice. All right, everyone. So, in the previous class, we have started this topic, the treatment of the evaluation account. And before proceeding further in this topic and starting with few more questions, let's just first of all recall everything. In the last session, we understood the meaning of the revaluation account, wherein I've told you that revaluation account uh, is an you can a revaluation account is an account wherein we record the increase and decrease in the value of the asset and liability that is happening on account of the change in the market condition. So why and when revaluation is prepared? Revaluation is prepared every time whenever there is change in the partnership, that we change in the partnership agreement, that is reconstitution is taking place in the business in the firm, and reconstitution may take place either on account of the change in PSR, the admission, the retirement, or the death of the partner. Irrespective of the situation, if the reconstitution is taking place, we need to prepare the revaluation. This is it. And after that, we understood the format of the revaluation account, wherein I have told you that revaluation account, as any other account, have two sides, the credit and the debit side. And on the debit side of the revaluation account, we record all such values or all such events that is leading to the decrease in the value of the asset or increase in the value of the liability. Whereas on the credit side, we record all such events which is causing increase in the value of the asset or decrease in the value of the liability. And after recording all the asset and liability on the respective side, depending upon the whether there is increase or decrease, we then find out their profits. We then eventually find out the profit and loss happening on account of such revaluation. Okay, and such profit or loss will be distributed among the partners in the old profit sharing ratio. Even if there is a profit, it will be distributed among the partners. If there is a loss, such loss has to be borne by the partners, and both will be done in the old PSR. Then, apart from the format of the revaluation account, we also talked about the treatment that we need to do whenever evaluation has taken place. So the treatment of revaluation depends upon whether we want to indicate the revised value of the asset and liability in the books of account or not. If partners have decided to indicate the revised value in the books of account, then in such a situation, we will have to prepare the revaluation account. Number one. Number two, if partners are of opinion that they won't be showing the value of the asset and liability, revised value of the asset and liability in the books of account, then in that situation they need to pass the adjustment entry. And adjustment entry, as usual, it will be same as in any other case. Adjustment entry will be same. In that case, we'll be passing the general entry, that is gaining partners capital account debit to sacrificing partners capital account will be credited. Okay. Apart from the meaning and the format of the revaluation, we also did question number 85 in the class in the previous session. And apart from discussing question 85, I think I gave you question number 86 for your homework as well.
Yes.
Right, everyone?
Yes.
So just wanted to know whether you guys have done this question or not. If anyone is having any problem, please let me know. Otherwise, I'll be solving it for you if you guys haven't done it. And if you guys have already completed this, then we can move to the next question. Please confirm whether you guys have done it or not.
Done.
Done.
Can you solve this question?
Okay. All right. Okay. You want me to solve it? See, first of all, in question number 86, it is saying that there are two partners, Bhavya and Sakshi, and their PSR is given 3:2, and their old PSR is given, and then there is the new PSR as well. So if the old and new PSR is given, that means surely there is a change taking place. That is, change in the PSR is taking place. And since there is a change in PSR, that simply means there is reconstitution taking place in the business, right? And looking at the balance sheet, we can see the value of the investment stands at 30,000. On the asset side, the value of the investment was 30,000. And now coming to the first point that is given in the question, investment is to be valued at 20,000. You know what? This is the market value of the investment, right? 20,000 is what? This is the current market value of the investment. And sir, what about 30,000? So 30,000 is the book value of the investment. This is the book value of the. Now tell me, since the value of the investment is 30,000 and the market value is 20,000, tell me whether there is increase in the market value or decrease in the market value. Whether there is increase in the, there is increase in the value of the investment or decrease in the value of the investment.
Decrease.
If decrease, right? And if the market value of the investment is decreasing from 30 to 20,000, tell me whether there is a loss or a profit.
Loss.
Loss. And loss is of how much?
10,000.
10,000. So has do we have any reserve to compensate, to adjust this loss? Whether we have made any reserve to adjust this loss? Answer is yes. We already have prepared a reserve, which is investment fluctuation fund. Investment fluctuation fund, students, this is nothing but investment fluctuation reserve. Investment fluctuation fund and investment fluctuation reserve both are same thing. Since the book value of the investment is 30,000, the market value of the investment declined to 20,000. That means there is a loss of 10,000, and such loss can be adjusted through the value of the reserve that we already have made. Since we already anticipated that the market value of the investment may decline, and on account of such anticipation, we already made an investment fluctuation fund, and the investment fluctuation fund stands at 20,000. Got it, everyone? Now, since the value of the investment is decreasing, we have the amount of reserve as well. So in such a situation, we will be able to compensate the loss from the amount of fund we have available, right? So in that situation, the general entry will be, what kind of general entry will be doing? The general entry will be, let me show you. I already solved question number 86 for the previous batch. So let me show you how are we going to do this. See, first of all, since the investment fluctuation fund is given now, so what are we going to do? We simply debit the investment fluctuation reserve or the investment fluctuation fund by 20,000. Is that right, everyone?
Yes.
Can we do that? Investment fluctuation fund debited by 20,000. And since the value of the investment is decreasing by 10,000, so therefore I have credited investment account by 10,000, right? And then the remaining 10,000. See, the value of the reserve is how much? The reserve we have 20,000, and loss is of how much? Loss is of only 10,000. Now the question arises, what about the remaining investment fluctuation fund? How much is the remaining investment fluctuation fund will be? Investment fluctuation fund will be 10,000 remaining. What are we going to do with this remaining investment fluctuation fund? Distribute among the partner in the old profit sharing ratio, right? So that is what I have done. Do investment account, the remaining 10,000 have been distributed among the partner in the old PSR. Sir, what was their old PSR? See, 10,000, their old PSR is, I guess it is 3:2. Let me show you.
Yes, 3:2.
Yeah, this is 3:2. So simply 3/5. And for Sakshi as well, 10,000 into 2/5. So calculating that, you will get 6,000 and 4,000 respectively. Got it, everyone? This is the first general entry. This is the general entry for the first additional, sorry, for the investment fluctuation fund. I hope this point is clear to us.
Yes, sir.
So the first additional point that is given in the question is clear. Moving on to the second point, goodwill. Now see, goodwill is to be, question is saying that goodwill is to be valued at 24,000. Now I've already told you that if you are able to recall, I've told you that there are two types of goodwill now. One is the purchase goodwill, and then there is self-valued goodwill. Tell me in the point two, which type of goodwill it is? It is the good self-valued goodwill or the purchased goodwill?
Self-value.
Self-valued goodwill. And do you remember, if we have the self-valued goodwill, how are we going to deal with that? What do we do with the self-valued goodwill?
Adjust among the partners. Gain.
Correct.
Capital account debit to
That
sacrifice.
is right. Perfect. And since we need to pass the adjustment entry, that means we will have to calculate the gaining and sacrificing shares of the partner. So for that purpose, you will have to prepare an extra working note in this case. See, before passing the journal entry, we will have to prepare the extra working note, that is the calculation of the gaining and the sacrificing shares of the partner. And for that purpose, you will apply the formula new share minus the old share, and you will see that the new share of the Bhavya and Sakshi is 1:2, 1:2, right? 1:2, 1/2, 1/2, and their old PSR was 3/5 and 2/5. After calculating that, you will be able to find out their gaining and sacrificing shares. So Bhavya's sacrificing share will be -1/10. Sakshi's gaining share is 1/10. So since Sakshi is the gainer here and the Bhavya is sacrificing, so the general entry in this situation will be Sakshi's capital account will be debited now, since Sakshi is gaining and Bhavya is sacrificing. So what will be the general entry? Sakshi's capital account debit to Bhavya's capital account. So that is what I have done here. Sakshi's capital account debit to Bhavya's capital account, and the amount was how much? 24,000 is the self-valued goodwill, and their gaining and sacrificing share is how much? 1/10 each. So 1/10 of 24,000 is equal to 24,000. Got it, everyone?
Yes, sir.
Halima and Aman. Is this clear to both of you?
Yes, sir.
Okay. Then coming to the last point in the question. Then now question is saying that general reserve not to be distributed between the partner. Now tell me, if question specifically tells us that general reserve need not to be distributed between the partner, then how are we going to deal with the general reserve? What are we going to do with the amount of reserve that is being reflected in the balance sheet? Tell me. Obviously, if it is not to be distributed, that simply means it is to be shown in the books of account in the future as well. And if anything is to be shown in the books of account in the future, such reserve should be adjusted among the partners and they're gaining and sacrificing shares. Am I right, everyone? Sania, Halima, am I right?
Yes, sir.
So for that purpose, what will be the general entry? Again, gaining partners capital account will be debited to sacrificing partners capital account. Is that correct?
Yes.
So for that purpose, the calculation, the solution will be Sakshi's capital account will be debited to Bhavya's capital account, and we already know the gaining and sacrificing shares. So all we need to do is just find out 1/10 of 23,400. So 1/10 of 23,400 will be 2340. So Sakshi's capital account will be debited by 2340 and Bhavya's capital account will be credited by 2340, since Sakshi is the gaining partner and Bhavya is the sacrificing partner. And the narration will be being general reserve adjusted among the partners. Got it, Aman and Halima?
Yes, sir.
Yes.
You also wanted to write it down?
Done, sir. I wrote.
You wrote it. Okay. Okay. So now let's talk about next question. Question number 87. Question number 87. See, question 87. It is a little lengthy question, as it contains so many additional information. So starting with, first of all, it says that Kareem, Rahman and Naval are partners sharing profit and losses in the ratio of 5:3:2. So their old PSR is given. Now, looking at the asset side of their balance sheet, they can see we have they have the land and building, machinery, computer. Then the value of the investment is given, and it says that the market value of the investment is only 90,000, but the big book value of the investment is 1 lakh. So clearly, question is question is telling us that there is reduction in the market value of the investment, and for the investment fluctuation, we already have made a reserve up to 30,000. We already have anticipated that the investment may go down up to 30,000. Therefore, we already prepared an investment fluctuation reserve earlier. And since we only the investment, the value of the investment only goes down by 10,000, and we have sufficient amount of reserve to compensate such loss, so we can obviously adjust some of the investment fluctuation reserve towards the reduction in the value of the investment, and the remaining will be distributed among the partners, right? Moving on to the next thing, debtors is given as 50,000, cash in hand, cash at bank. Advertisement suspense is also there. See, advertisement suspense is what? Advertisement suspense is loss. It is a loss. It is a kind of loss. And then we have general reserve of rupees 60,000 on the liability side, you can see. And then we have the capital account balances of the partner, 250, 250 and 2 lakh. Then the value of the creditors is also there, 90,000. All right. So I hope the asset and liability sides of the balance sheet is clear to all of you. Aman, Halima, is this clear?
Yes.
Yes.
Okay. Okay. Now coming to the additional information given in this question. There are so many additional information not to be worried about. We will be dealing with all the information one by one. So first thing that is given in the question is the value of the land and building decreased by 5%. Value of the land and building is decreasing by 5%. Value of the machinery is increasing by 5%. A provision for doubtful debt to be created 5%. Motorcycle valued at 20,000 was unrecorded and is now to be recorded. Okay. Out of sundry creditors of rupees 10,000 is not payable. Goodwill is to be valued at 2 years purchase of the last 3 years. Then it also says the novel was to the last additional information says that the novel was to carry out the work for the reconstituting the form at a remuneration including expenses of rupees 5,000, and expenses came to 3,000 past the general entry. Okay, so considering all the additional information, the question might look a little difficult, but this is not that difficult. We will be dealing with all the additional information one by one, and you will find that this is very simple. See, now come to the last statement in the question. Question says that we need to pass the journal entry, right? We need to pass what? We need to pass the journal entry, number one. And we are also required to prepare the revaluation account, right? So we are required to do two things in the question. Firstly, to pass the journal entry, then to prepare the revaluation. So first of all, what are we going to do? We will first of all pass the journal entry, and then we will prepare the revaluation. Okay, so we will be passing the journal entries of all the additional information given to us in this question, one by one. Okay, not to be worried about all the information. We will be dealing with all the items one by one. But first of all, before going forward, just wanted to know all these points are clear. The question is clear. What this question requires us to do, is it clear to all of you, or both of you? All?
Yes.
Yes.
So let's continue. First of all, continue with the preparation of the formation of the passing of the journal entry. General entries. Okay, so we'll start the journal entry from the, yes, we'll start the journal entry from the investment. So the value of the investment is given to us as 1 lakh and the market value is 90,000 and the investment fluctuation reserve is also there 30,000. So first journal entry we can do for the investment fluctuation reserve, right? First journal entry can be done for the investment fluctuation reserve, yes or no? So that will be investment fluctuation reserve account debit. Investment fluctuation reserve account debit to value of the investment is declining by how much? 10,000. Investment account, investment fluctuation reserve is of how much? 30,000. And the value of the investment falls from 1 lakh to 90,000. Na? So that means there is a loss in the value of the investment by rupees 10,000. Such loss can be easily compensated from the investment fluctuation reserve since we have sufficient amount of reserve in our balance sheet. Now the question arises, what about the remaining investment fluctuation reserve? What are we going to do with the investment fluctuation reserve? So we will be distributing it among the partners in the old PSR. So I'll be writing, since there are three partners, name of the partners are Kareem, Rahman and Neville. So I'm going to write down Kareem's capital account will be debited. Kareem's capital account will be credited, sorry. Then Rahman's capital account will also be credited. And Neville's capital account and the remaining amount of reserve which is 20,000 will be distributed among the partner in their old PSR. Old PSR is 5:3:2. So that means 5/10, then 3/10 and 2/10. In this way, it will be distributed among the partner. So 10, it will be 10,000 for Kareem's. Kareem's capital account will be credited by 10,000, and remaining 10,000 will be distributed between Rahman and Neville. So Rahman is going to get 6,000 and 4,000 respectively. Now everyone, is this clear? Yes or no?
Yes, sir.
Yes.
Okay. And we will have to write the narration in this question as well. So we'll write down the investment fluctuation reserve adjusted toward the loss in the investment, and remaining is distributed, adjusted and distributed among partners. Tell me, this entry is clear, everyone? Halima and Amal, both of you.
Yes. Clear.
Amal. Okay, so moving on to the next entry. Any other thing that we can do from the balance sheet? Yeah. See, there is general reserve. Now, general reserve, I've told you that general reserve is a part of profit, right? General reserve is a part of profit, and since nothing is mentioned in the question how to treat the general reserve, since nothing is mentioned, it simply means that we can distribute it among the partners, right? Since nothing is mentioned about the general reserve in the question, neither in the balance sheet or in the additional information, that simply means we can distribute it among the partners, yes or no? Aman Halima, please confirm na if the value of the general reserve is given to us in the liability side of the balance sheet, yes or no?
Yes.
So what I'm asking is that if nothing is mentioned there in the question about the treatment of the general reserve, then how to treat the general reserve? What are we going to do with the reserve that is given in the question, given in the balance sheet?
Distribute among partners.
Correct. Distribute it among the partners. Unless any other thing is given, we will be distributing it among the partners in the old PSR. So for that purpose, the general entry will be, anyone of you can please tell me what will be the general entry for distributing the general reserve among the partner? No response. General reserve account will be debited.
Account debit.
General reserve account debit to obviously this will be distributed among the partners now only. So this will be credited to Kareem's, Rahman and Naval account. Right, everyone?
Yes, sir.
What was the value of the reserve? Value of the reserve was 60,000. So 60,000 will be debited. And same will be distributed among the partner in the old PSR. That means 5:3:2. So obviously Kareem is going to get 30,000. And 18,000 and 12,000. And we will be writing the narration as well, being general reserve distributed among the partners. Got it, everyone? Is this clear to all of you?
Yes, sir.
Now let's talk about point numbers. I don't think there is any other information that we need to deal in the balance sheet. Yeah, there is one more thing. There is advertisement suspense is also given on the asset side. And since I've told you that advertisement suspense is what? It is a loss. And since it is a loss, it need to be distributed again. It need to be distributed also. And who is going to bear such loss? Tell me, who is going to bear such loss?
Partners.
Obviously the partners. And in what ratio they will be bearing this loss? In the old PSR. So now tell me, what general entry will be done here? Tell me, guys. Tell me, Aman Halima, what general entry will be doing here? Kareem's capital account will be debited now, since he is going to bear such loss. So his account will be debited. Kareem's capital account will be debited. Will be debited Rahman's capital account will also be debited, yes or no? And Neville's capital account will also be debited. Tell me, Aman, Halima, clear?
Yes, sir.
Two advertisement suspense account. Right, and the amount of loss was 5,000 only. So this 5,000 is distributed among all of them. So Kareem is obviously going to get larger shares since he's the he has the majority of shares in the partnership. And then Rahman is going to get 5,000 into 3 by 10, that means 15,000. And
Yeah, 1,000.
sorry, yeah, 1,500 a month, 1,000. So the narration will be being advertisement suspense distributed. This is clear, both of you?
Yes.
Sir.
Good. Now I think we have treated everything that should be treated in the balance sheet as of now. Now we will move to the additional information given on the next slide. So now starting with the first point, here you can see the value of the land and building have decreased by 5%. Right, value of land and building have decreased by 5%. So tell me, if the value of the land and building is decreasing by 5%, that means there is a profit in due to such decrease, or there is going to be a loss due to such reduction in the value of the land and building. Loss. And since it is going to be a loss, which account will be debited? In the previous class, I've told you that whenever there is increase or decrease in the value of the asset and liability, if there is increase in the value of the asset, such increase will be shown on the credit side of the revaluation account. If there is decrease in the value of the asset, such decrease will be shown on the debit side of the revaluation account. Similarly, if the value of the liability is reducing, such reduction will be shown on the credit side of the revaluation account. And if there is increase in the value of the liability, such increase should be shown on the debit side of the revaluation account. So keeping that in mind, please tell me, if the land and building is decreasing by 5%, and if you are saying it is a loss, then on which side of the revaluation account we will be showing it, on the debit side or on the credit side?
Debit.
Aman, on which side of the revaluation account? Aman, on which side of the revaluation account we will be showing it? Tell me now, Aman. Say, at least say something, either on the debit or the credit side.
Debit side.
Debit side. And why should we show that on the debit side? Because, sir, you have told us in the previous class. See, here I have, while preparing the revaluation format of the revaluation account, I've told you that whenever there is decrease in the value of the asset, it is to be shown on which side of the account? On the debit side. And since here the value of the land and building is increasing or decreasing? Decreasing. That means it should be shown on the debit side. So the general entry for this will be, since revaluation account is to be debited now, so I'll write down the general entry. Since general entry is going to be debit, revaluation account is going to be debited, so I'll write down revaluation account debit to, tell me, to land and building. Is it clear? Yes or no? Is this clear? Yes or no?
Yes, sir.
Okay. And now let's now calculate the values. So see, now look at the balance sheet. Earlier, the value of the land and building was how much? The value of the land and building given in the question is, in the balance sheet, is 3,50,000. And there is a reduction in the value of the land and building by 5%. That means 3,50,000. What? How much is 5% of 3,50,000? It is 17,500. Right. So the value of the asset is reducing by 17,500. So what I'm going to do, I'll write down, revaluation account will be debited by 17,500, and land and building is reducing by 17,500. Therefore, land and building account is credited. And the narration that I'll have to write is being decrease in land and building. Tell me, Halima Aman, is this clear?
Yes.
Okay, moving to next point. Next thing in the question is, it says that the value of the machinery have increased by 5%. Tell me, if the value of the machinery is increasing by 5%, is this a profit or a loss?
Profit.
And if it is a profit, then on which side of the revaluation account we are going to record the increase in the value of the
Credit.
machinery? Credit side.
Sir.
So that simply means revaluation account is going to be credited. Is that correct? And machinery account will be
Debited.
debited. So the journal entry
Yes.
will be, we'll write down the value later, but just first of all, let's pass the journal entry. So in that case, machinery's capital account will be machinery account will be debited to the valuation account. And I'll write down being increase in machinery. Got it? The general entry is clear?
Yes, sir.
Okay, now coming back to the question, let's just find out the value of the machinery. Machinery was earlier valued at 2,40,000, right? It was 2,40,000. Now it is increasing by 5%. That means 5% of 2,40,000 is 12,000, right? 5% of 2,40,000 is how much? 12,000. So that will be, machinery account will be debited by 12,000. Sorry, 12,000. Done? Any doubt, anyone?
No, sir.
No doubt. Now let's move to the next one. Next point. See, provision for doubtful debt to be created at 5% on sundry debtor. Now see, provision for this is what is this? Provision for doubtful debt is what? Provision for doubtful debt is like we are anticipating that we won't be able to recover 5% of the value of the debtor. See, let's just look at the value of the debtor. Value of the debtor in the question, asset are what? Sorry, debtors are what? Debtors are asset, na? So debtors are asset, which is valued at 50,000 in the book. The book value of the debtor is currently 50,000. But we are anticipating that we won't be able to recover 5% of the sundry debtor, and therefore we are preparing a provision for that. What we are doing, we are making a provision for the doubtful debt. So what do you mean by doubtful debt is the value of the debtor which is about which we are doubtful that we won't be able to recover from the customers. So that is like we are expecting that there is going to be a loss in the debtor by 5%. So that simply means the value of debtor is going to decrease by 5%. Am I right? If we are expecting that there are 5% debtor which is doubtful, that means there is going to be decrease in the value of the debtor, and that if debtors are asset, so that we can simply say that there is going to be reduction in the value of the asset. Am I right?
Yes.
Yes.
And if there is going to be reduction in the value of the asset, then does that mean that we should debit the revaluation account?
Yes.
Right. We will be debiting the revaluation account by 5% of the value of the debtor. So I'll write down, since it is a loss for the business, so I'll write down revaluation account debit to provision for doubtful debt. Being provision on debtor made. Now, tell me, the journal entry is clear now, both of you?
Yes.
Yes.
We just need to find out the 5% of the debtor. So 5% of the value of the debtor is 50,000. So 5% is obviously 2,500. 5% is 2,500. So 2,500. Next item. G. Next is question is telling us that motorcycle is valued at 20,000, which was unrecorded and is now to be recorded in the book. See, there is one unrecorded asset. We haven't recorded the value of the motorcycle earlier while preparing the balance sheet. Now we have a motorcycle, the value of which is 20,000. Since it was unrecorded earlier, that simply means that we will be recording it in the future. Now, when we will be preparing the balance sheet, we will be recording it in the balance sheet. So does that means if there is unrecorded asset, if we are going to record it in the future in the books of account, so is it going to increase the value of the asset for the business? Yes or no? If unrecorded asset will be shown in the balance sheet, is it going to increase the overall value of the asset? Yes or no?
Yes.
Yes. If the motorcycle, which was not earlier recorded, see, looking at the balance sheet, you won't find anywhere that there is motorcycle. You are not able to find motorcycle because the value of the motorcycle was not recorded earlier, but we'll be recording it now. So if you will record the motorcycle in the books of account, that is going to increase the overall value of the asset. And since the assets are increasing due to the valuation of the motorcycle, so what are we going to do with the increase in the motorcycle? Whether we should credit the revaluation account, or we should record it on the debit side of the revaluation account?
Credit.
On which side of the revaluation account we should record motorcycle?
We'll
Guys,
credit
my
it.
question is, sorry,
Credit.
Aman, is this clear to you or not? Shall I repeat this?
Yes, sir.
See, what I'm saying is that the value of the motorcycle was earlier remained unrecorded in the balance sheet. So that simply means that we will be showing it in the books of account in the upcoming years, in the next fiscal year. That means the value of the overall asset will be increased now, right? The value of the asset will increase, yes or no?
Yes.
If we will record the one new asset in the balance sheet, that is going to increase the overall value of the asset. That is what I'm asking. If the value of the asset is increasing, whether it should be recorded on the debit side of the revaluation account or it should be recorded on the credit side.
Credit side.
Perfect. So I'll write down motorcycle account will be debited, obviously, and revaluation account will be credited. Value was 20,000. And you can also write down the narration being motorcycle just a minute. Recorded. Done. Is this clear? Journal
Yes.
entry G.
Clear.
All right. Now, next. The fifth point says that the out of sundry creditor, 10,000 is not payable. First of all, tell me, sundry creditor is what? Is this a liability for us or it is an asset? Tell me. Sundry creditors are what?
Liability.
Liability.
Liabilities. Correct. Liability. And if question is telling us that liability up to rupees 10,000 is not payable, so that is a good news, na? That is a kind of profit, na? Right? If liability is not to be repaid, not payable by 10,000, that means we have a gain, we have a profit, of 10,000. So see, that simply means the value of the creditor is decreasing by 10,000. Can we say that? Can we say that? See, in the balance sheet, you can
Yes.
see the value of the creditor is how much? It is 90. It stands at 90,000, right? Question is telling us that we are not required to pay 90,000. Instead, only 10,000 will be payable because 10,000 is not payable at all. Obviously, this is a profit. We have a profit of 10,000. Got it, everyone? And since there is a profit, why? Because the liability is decreasing, and I've told you that whenever liability decreases, we show it on the credit side of the debit side of the no, I'm sorry. We will be showing it on the credit side of the revaluation account. Since there is a decrease in the value of the creditor, on which side of the revaluation account we will be showing it? On the credit side. I hope this is clear.
Yes, sir.
So we'll do we'll write down sundry. Sorry, the valuation account is to be credited now. So we'll write down sundry creditors account will be there. Sundry creditors. Account debit to revaluation. 10,000. Understood, both of you?
Yes, sir.
Any other thing still left in the question? Yeah. Question point 6 in the questions talk about the goodwill. Now see, goodwill is a different point altogether. This is not at all related to the revaluation account. Goodwill is to be dealt separately, since it is saying in point 6 that goodwill is to be valued at 2 years purchase, and the profit of the last 3 years is given to us 50,000, 22 lakh 50,000, 2 lakh 50,000. So first of all, we will have to find out the goodwill in this question, and then whatever the goodwill that is calculated, such goodwill will be adjusted among the partner in the gaining and the sacrificing ratio, gaining and the sacrificing shares. Am I right? Since goodwill is this time, see in question in point 6 says that goodwill is to be valued. How do we treat valued goodwill? How do we treat valued goodwill? So we just adjust it among the partners in the gaining and the sacrificing shares. Am I right? Goodwill, if it is valued, it is to be adjusted among the partner in the gaining and the sacrificing shares. Am I right or wrong?
Yes.
Yes. So this is not at all related to the revaluation, right? So we'll be doing it separately. After passing all the general entry, we will be passing the adjustment entry for the goodwill. Then at that time we'll talk about the valuation of the goodwill, and we'll cover the point number 6. For the timing, I'm skipping point number 6. This will be your homework. You will have to find out the value of the goodwill and pass the adjustment entry. I'm not going to solve it in today's session. I'm giving you this as your homework. You need to solve it. Okay, moving on to item number 7. It says that Naval was to carry out the work for reconstitution and the firm at a remuneration including expense of rupees 5,000. Expenses came to 3,000 past Jan. Okay. See, one of the partner, there are 3 partners, Naval, Kareem, and Rahman. One of the partner, whose name is Naval, he have agreed to carry out all the operations, all the activities, all the work relating to the reconstitution. Okay, he is taking the responsibility that he will be carrying out all kind of work relating to the reconstitution of the partners. And on account of reconstitution, he will be charging some remuneration, since he is actively working for the reconstitution of the firm. So he requires a remuneration of 5,000 as a compensation for whatever he is doing for the at the time of reconstitution of the firm, right? But after the agreement regarding the remuneration, Naval's remuneration is 5,000, but actual amount of expense that was incurred is only 3,000. Listen to me carefully. What is the agreement among the partners regarding the Naval's remuneration? Partners have agreed that they will be paying 5,000 to Naval for carrying out the work relating to reconstitution. Is that right? Partners have agreed with Naval that they will be paying remuneration of 5,000 to Naval on account of whatever he have done regarding the reconciliation. But later it is found out that the expenses came to only 3,000. Then tell me whether Neville will be paid according to the agreement that have taken place, or he will be paid depending upon the expenses that was actually incurred. Tell me whether he should be paid as per the agreement, that is 5,000, or he should be paid as per the actual expenses that is incurred, which is 3,000.
Depending on the actual expense.
Actual expense. Okay. Anyone, Halima, what is your stand?
I think actually expensive.
Okay, in that case, both of you are incorrect. See, if there is an agreement regarding the payment of the remuneration, then he should be paid as per the agreement, na? How it is met? How does it matter for the partners whether he have incurred expenses more than the amount of remuneration, or the expenses is less than the amount of remuneration? If the amount of expenses less than the remuneration, it is not at all relevant. Even if the amount of expenses was would have been, let's suppose the expenses would have 7,000. In that case, whether partner should pay 7,000 instead of 5,000, answer is no. If there is an agreement regarding the remuneration at rupees 5,000, then Revel should be paid 5,000 only, right? Irrespective of the expenses he have incurred, whether he have incurred more than 5,000 or less than 3,000, less than 5,000, it does not matter at all. So the actual expense is not at all relevant. Agreement is important. Since it is already agreed that he will be paid 5,000, so he will be paid 5,000 only, not 3,000. I hope this point is clear.
Yes, sir.
Well,
Okay,
then
so
what
in
will
that
happen
case,
to 2000?
sorry,
Will 2000 be calculated?
no. We won't be doing anything regarding 2,000. That is not the point at all. You see, this is not at all relevant for us. Whatever the expenses that he's incurring, it is his personal matter. The thing that matters to business is that the remuneration is agreed at rupees 5,000, that is to be paid to Neville. And since it is going to reduce the overall profit of the business because it is an expense, obviously, remuneration of Neville is an expense, and Neville is going to get 5,000, and because it is an expense, he will be recording it on the debit side of the revaluation account. This is what is important. 3,000 not important at all. Right, so I'll write down the general entry as, since it is a loss now for from firm's point of view, it is going to reduce the amount of profit. So I'll write down revaluation account debit. Revaluation account will be debited by 5,000 to, tell me, to Neville's capital account. Neville's capital. How much? 5. And this is for his remuneration. So we'll write down being tell me, is this clear now?
Yes, sir.
Okay. So guys, both of you, Aman and Alima, we did all the journal entries. Only one journal entry is still required, that is for the valuation or the adjustment of the goodwill. And for that purpose, you will have to first of all find out the value of the goodwill, then only you will be able to pass the general entry. You will have to first of all find the value of the goodwill, then you will have to find out the sacrificing and gaining shares of the partner, and then only you will be able to pass the general entry. Aman and Alima, is that clear, both of you?
Yes, sir.
So will you be able to do that as your homework?
Yes.
Okay, so that is your homework. One more thing that is yet to be done in this question, that is preparation of the revaluation account. So I'll be I'll be covering that part in the next session. We'll talk about the revaluation. How do we prepare revaluation account in this question? But if you have any question regarding the things that we discussed today, regarding any point that we discussed in this question, if you guys have any doubt, please let me know. Otherwise, we'll end this session. Aman and Halim,
No doubt, sir.
no doubts. Okay. So guys, this question is not yet completed. We will be continuing this question from this point onward in the next class. So till then, all of you, both of you, in fact, take care. Goodbye.
Thank you,
See you
sir.
on
Bye.
Sunday. Allah Hafiz. Bye.